What's going on, traders? I took a couple trades this morning. I did a day trade and I closed out a swing trade. So, like I said, I closed the swing trade out this morning as well as I made a quick day trade. The swing trade was on MRVL Marvel Technology Group. I had one contract, one put that I had bought on Monday, and we'll see why I bought that on Monday when we look at the chart. The expiration was May 17th. I bought in at 57 cents and I sold out at 25 cents today. So that made me a nice little loss there to start out the day. But that's a-okay. The swing didn't really go according to the plan, so getting stopped out there was no big deal. In total, I only had $57 of risk on the line, which really is pretty small in the grand scheme of things, and I think if it had gone in my direction, it would have played out nicely. It was essentially the same strategy that I use intraday, except on the daily time frame. I then made a SPY trade intraday here. You can see I bought three contracts, expiring today. I was playing the 289 calls, and I was in at 90 cents and out at 98 cents. So fighting back there and getting back to only $5.50 down on the day. Pretty good, I'd say. Recovering that loss pretty easily. So we'll look at the chart and think about it, or have a look at it. I'm recording this in hindsight now. I missed the audio on the first go through, so here we are looking at the Marvel chart. So looking at the Marvel chart, you can see exactly how this sort of lines up with my intraday strategy. We had a big overextended move to the upside and then a inverted hammer candle right at resistance there. So that is why I essentially bought a put on Monday. Price sort of went sideways on Tuesday, closed maybe down $1 on my position, a couple dollars on my position, but then with the whole gap up and Qualcomm going absolutely nuts, Marvel sort of rode the coattails of that move and got a big gap up the next day. So that is where I stopped out of my position for my loss. Again, I only had 57 bucks in the trade, so not a huge deal there. And it is what it is. It's, if the plan doesn't work out, move on to the next one. So you can see the wick went up and touched our next resistance line. Probably, might be a good short now, but I'm not going to go back and play it after I already lost on it once. That's just bad for psychology if I were to lose again. So with that, we'll move on to the SPY trade. Alrighty guys, so here's the SPY trade. As the prices started to come down right here, I had a limit order fishing around down there. I was filled at 90 cents as the price snapped down and sort of hit my entry. And then within a short little, I think it was, just about a minute and a half, essentially as the next candle formed green, I was filled on the limit order to get out for 8 cents on 3 contracts. So making a quick buck there. Obviously holding would have paid in the long run. However, again, sticking to the plan, being disciplined, knowing when to get out is great. Happy to almost make up that loss there on the swing trade, and with that, sort of wrap things up for the day. So only down 550, not a big deal, easily recoverable. And with that, I hope you learned something. If you enjoyed the video, leave it a thumbs up. If you have any questions or comments, let me know down below in the comments section. And as always, subscribe for more of this content.